Hello and welcome to another update video about ADA. Yeah, I just wanted to start here on the larger time frame to give you a good overview of the bigger picture. This chart shows still potential bullish outlook as per our Elliott wave method, but only if, and it's always based on if-then conditions, only if the price stays above the 64-cent mark. Why is this one so important? Well, our method and guidelines are telling us that should the market break below the 50% retracement of a so-called third wave rally, which is typically the strongest wave or the strongest element of a 5-wave rally, well, then this rally is starting to fail. And this is typically then when probabilities are starting to shift towards more bearish interpretations. We'll talk about that in a minute. But for now, above the 64-cent level, I am expecting at least one more high to complete either the yellow scenario in an ABC structure, which is a 3-wave pattern, a very common Elliott wave pattern, which could indicate a major top, or in the white scenario, which could form a 5-wave move up, another very common Elliott wave pattern, but a lot of altcoins form price tops after 3 waves, right? So we always have to be ready for that. And then in addition to that, whether it's the yellow scenario or the white scenario doesn't make a difference in the short term, because for now, both of these are pointing higher. The difference is that after this top, in the white scenario, we can get another corrective pullback to form a higher low, but it will probably take a long time and another higher high, which is nice to have, but I would not rely on it. Now, that means we don't need to distinguish between the yellow and the white scenarios in the short term. We just focus on higher in the short term, as long as we're holding 64 cents. That's the key pivot, the key level where probabilities start to shift to the downside. Okay, what would happen if we break below 64 cents? It's always about understanding alternative scenarios as well, and we need to have a plan for a more short-term bearish outcome. Well, in this case then, in the orange scenario, a wider correction is likely unfolding, and the focus will shift back to the support area that we've been watching in the period between, you could say, March 2024 and November. And I'm talking about the area between 29 cents and 36 cents. In this case, we would have to assume that the pullback, the correction that started here in March, never completed. That the rally that we saw after the November lows was just part of a larger high B wave, which would result back in a test of that lower support region. So it means that pretty much this correction really never finished. This is all part of that correction. And then we can observe this lower support area again for possible upside reactions and a bounce. So these are the two scenarios I'm observing. Obviously, needless to say, if we also break below the lower support area, well, the risk of a long-term bear market, or let's say at least a continuation of a bear market, a much larger correction, is increasing. Because really, whatever happens, we really don't want the price to break back below the June 2023 low that formed here around 22 cents, which means, therefore, in the short term, we focus on higher prices, at least one more high, which could take the price to around $1.72 or even $2.36 in the next instance. And then we can take it from there step by step. Now let us talk about the smaller time frame. And yeah, here on the smaller time frame, I'd say very, very balanced probabilities. The price is still holding above communicated micro support that is located between 81 cents and 90 cents. As per the previous updates, I shared with you that the 64-cent level is key support. We have a lower support area between 76 and 64 cents. But then due to the reaction that we saw on the 20th of December, we said that maybe, just maybe a low in this yellow wave 4 is already in, but it would require a break to the upside of that corrective price channel to confirm it further. Well, that hasn't happened yet, but the price is still in a support region. And for me, it's like that the 80.9 cent level that you see here, the 78.6 retracement, is the key pivot, yeah, the distinguishing factor that helps us distinguish between the yellow and the white scenario. So that means we have an upper support area that the price is still moving within, defined between 80.9 cents and 90.2 cents. And as long as we're holding above 80.9 cents, the yellow, more bullish scenario, during which a larger wave 4 already bottomed on the 20th of December, is valid. But it needs to be further confirmed with a break out to the upside of that corrective price channel and a break above the $1 mark to confirm it further. In that case, then the price should reach $1.26 next in yellow wave 3. However, below the 80.9 cent level, the yellow, more bullish scenario will become less likely. In that case, then, in the white scenario, in which we're tracking one more low and during which I communicated a 1-2 setup to the downside is unfolding. In this case, if we break below 80.9 cents, yeah, one more low is likely confirmed. It's likely going to happen. And then the focus will clearly shift to that lower support area between 76 and 64 cents. At the moment, I will not rule out yellow. I mean, certainly a bit of a setback here right now, but essentially we're just ranging and the market is still holding above the upper support. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.